Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, May 8th, 2015. I wanted to do a quick overview of the airline sector and what impact we might be looking at here if we do get a drop in crude oil prices, as I'm calling for. Um, as most of you know, airlines, their biggest cost is fuel. And so obviously rising energy prices or oil prices have a negative impact on the airline's earnings. And so, as we can see from this chart, this is the black line here shows the regional airline index. I chose that because about a week or so ago I posted half a dozen or so, I think about seven total airline stocks, most if not all of which were regional airlines. So that's why I'm going to look at the regional airline index here. We don't have the major carriers like Delta and United on there as shorts. And the blue line here is USO, so there's just a way to track crude oil prices. And as this chart clearly indicates, at least at first glance and overall, there's unarguably a inverse relationship between oil prices and the airline stocks. In other words, as we see here from this point, when crude oil rallied, the airline stocks corrected. Almost a one-to-one inverse correlation there. From that point right here, crude oil dropped, airline sector rose. And so you can look at the relationship. It's pretty clear. This is really where crude oil started falling off a cliff back in 2014 last year, and we can see airline stocks had one of their largest rallies in years. So the reason for this video, I wanted to update the airline sector. For those of you that know, I've been focusing, although there's some miscellaneous trades on the site, my main focus and my positioning lately has been short the equity markets. I've been doing a lot of updates on the IWM, SPY, QQQ, airline shorts, as I mentioned, about a little over half a dozen of those names were posted recently. Two of those have already hit at least one, the first profit target, and we had, I think it was RJet, hit the final sold target just recently. So that one's closed out, and I'll get to that in a minute. But what I wanted to look at here is I fielded a question today asking me, being that I'm bearish on crude oil, isn't that going to affect the airline stocks? And the answer is quite possibly. I mean, there's going to be three possibilities here. Either I'm right on my call on oil and I'm right on the call on the airlines, and there's a disconnect and both drop. I may be right on the call on oil, and if falling oil does indeed give a boost to the airline stocks, and the remaining trades will fail to hit their targets, they'll be stopped out. Or we may get a disconnect where we have both falling oil and falling airline stocks. May have mentioned that as the first one. So either way, sometimes I can be wrong on one and right on the other. A good example is, back last year when I was looking for a significant pullback in the dollar, that never occurred. I mentioned at the time I wasn't trading the dollar; I was tracking it to trade the gold mining stocks and gold and silver. Well, it turned out the dollar kept going on a near parabolic run. Rise, that is, and yet we did extremely well trading the gold mining stocks. Gold, bucked the trend, the usual inverse correlation. So there are those inverse correlations, and let's just get on to that. Let's quit rambling here and take a look. What this is, I've noticed, or I've marked the disconnects from this inverse relationship. In other words, if you look at these green boxes, you'll notice there are times where that relationship doesn't happen. Here's rising oil. Remember, the blue line is rising oil, and airline prices did not correct. They really were about flat, maybe rose slightly over that period. Here's another period, rising oil, along with a strong rise in the airline sector. Here we go. Oil prices fell sharply. Airlines fell right in line. It was almost a one-to-one positive correlation in these instances, near lockstep moves. So I did want to point that out, and as I said, the primary reason for those recent airline shorts was the bearish technical patterns, the charts, and if I would expect a multi-month move down in crude, like I still think is a possibility here. I'm not certain how deep and long this pullback in crude will be, even if I get the call right. But if that's the case, I wasn't looking for a long-term multi-month swing trade on these airlines. Anyways, I was just looking some quick pullback trades. And what I wanted to point out here as well is the fact that this move in crude oil prices was, obviously, as you can see here, and as we all know, the strongest move that we've had in crude in years as far as rally. This was, I think it lasted only 6 weeks. And what I'm doing, if you look in the upper left-hand corner of the chart, towards the very bottom, it shows you this is a 29% return from the bottom right here. So about 30, call it 30% off the lows in just about, I didn't zero right in on the beginning. I know that's about 1.6 months, I think, is the actual time. So a tremendous sharp move in crude. Yet, look what the airlines have done. They've been flat, and from that point, they're really about where they started. If you look, follow the beginning of this green box here, and airline stocks are right about where they were when that 20 or 30% rise in oil began. So this is something I'm looking at. I talk about these disconnects. There was a disconnect there, although we didn't, see airline stocks do much. We didn't see a correction, and that should be, and I think ultimately will be, manifested in the prices of those airline stocks. So even if we get a pullback in crude, I'm not expecting a deep pullback. Most of you know I'm bullish in crude. I've been bullish in crude since, just before that first bottom was put in. We made that marginal other low. So longer term, I think this was the end of the bear market, in crude oil, and my expectation is maybe a little more sideways action, maybe another pullback here. I've talked ad nauseum on the crude oil lately, so I won't get into that. But this is what I'm looking at. Just a pullback here. I still think that's a possibility, even if we get a pullback in crude, that the airlines are going to eventually absorb or factor in this recent run-up we've had in crude prices, and that'll probably cause a little profit taking. With that being said, at this point, because I do expect continued downside in crude oil, and a few of these airline stocks have already hit one or more price targets, I'm not as bullish. I wouldn't be adding to those positions at this point. I'm still short several of those, and if they exceed the suggested stops, I'm out, and I'll take those off the site. So with that being said, let's just take a look at a couple of those charts, and we'll wrap this up. Okay, this is Jetblue, JBLU. JetBlue is in this pretty steep rising wedge pattern, pretty well defined. We had this one spike. If we zoom in a little bit, you can see that intraday spike, but this is often the case, and this is why I talk about using daily charts, waiting for daily closes, candlestick prints above or below these trend lines. So that was just an intraday break. Prices managing to close back up inside the wedge. We're still wedging higher. If these negative divergences weren't still in place, in fact, they've only gotten larger. And I'm looking now, I'm seeing the MACD start to roll down. Once that blue line or the MACD crosses the signal line there, we'll have what I call confirmed divergence. RSI has been persistently high, so JetBlue is very extended, and I maintain these targets. I cannot recall right now. I should look at my notes. Whether this one's been hit the suggested stop. I may have had tight stops, but I believe I recommended a 3-to-1 risk-reward ratio depending on one's preferred target. I think this one easily has the potential to make it down to this 16, 17-ish range, and quite possibly to the 14, 20 range, in which case you would have had a 3-to-1 RR from where you entered down to this level, so I don't think we've taken that stop out yet. That's JetBlue. RJet, by the time I have this video posted and published, I should have this updated on the site. This one just recently hit the sole target I had here, a support level at 1145. This one was mentioned as a short on, I think it was April 28th, as it was back testing the wedge. So that was right here. I believe this green candlestick. Yeah, that's April 28th. So this one pretty much broke down, textbook, beautiful technical analysis, a breakdown of this well-defined uptrend line, back test, kissed it a couple times from below, and then just boom, plunged. So that's about a 12% gain in just less than a week or so, right around there. And that one's complete. That was the sole profit target I had on RJet, so that'll be removed from the site. Next one was ALK, Alaska Air. This one still, breakdown of this uptrend line. I had believe I had this support level drawn here. We've tagged it several times. Kiss, 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 kiss. Made a back test of that uptrend line. So where this one goes, I could probably add right now for those of you, that aren't sure on your stops. We can draw what looks to be shaping up as a downtrend line from up top, sort of a descending triangle pattern as well. So that would be one possible stop. The other, probably more reasonable stop, I put a horizontal line. If you look to the left of the crosshairs, there are two reaction highs that are equal with each other. Call that, give it a little margin of error, call it the $69 level. If and when that ALK takes that out, odds are that one's probably going higher from there. So maybe a stop somewhere right around or just a hair above 69. And the next short entry would be on a break below this support of 61.55. Give it a few pennies. Always as an aggressive trade, you can short an intraday break. It'll be the end of day close below that line that'll really trigger the next sell signal to move down to that 50-40 area. This is HA. We have this trend line which is yet to be broken, and this is a level here. Stop level. This is a gap, and right now this gap has been backfilled. This is actually the second attempt to backfill that gap and testing it from above, and gaps often act as resistance when tested from below. So pretty much if it can solidly take out and move above this gap, it's probably going to then go on to take out that previous reaction high. That'd be a bullish event. And of course, we still have the potential to break down below this trend line, and if so, that $18 area, set your stops just a hair above. I'm sorry, your buy to cover order just above that. That would be the downside. LUV, Southwest Airlines. This one is trying to pull a little stick save here recently. Nice breakdown, back test. Prices started moving lower, made it more than halfway down towards that first target. Today, just as with the markets, they're trying to regain that level. So let's see where things close. It's also a Friday. I know there's a lot of people that probably jumped in to short this market, nervous shorts that are covering, and I don't read too much into Friday's action. Let's see what happens come Monday. Even if we print a close on this and in the broad markets today, I'd like to see some follow through on Monday, see how things stick. But that's love. So I believe on love, same story. I suggested these are the four potential price targets, and depending on where you shorted and which one's your price target, I would use a risk to reward ratio of no less than 3-to-1 calculated on your preferred target. In other words, somebody only targeting this level or this level will have a much tighter stop than those going for a big swing trade down to the 2870-ish level. This is ALGT, Allegiant Travel, another airline stock. Broke down, textbook looking bearish bearish pennant pattern. You see the flagpole, the pattern, the breakdown, and with the airline sectors in the market bouncing the last few days, it stopped short. This pattern still projects down there. Ideally, you'd want to see that impulsive selling continue to go, but we're still fine on this. If I'm not mistaken, this one was first mentioned inside the bear flag pattern. The short entry trigger was on a breakdown of that pattern, so we're just about break even on this. So, if prices move up and above the top of that pattern, again, I can't recall if a suggested buy to cover level or stop level, was made for that. And if not, look at that $73-ish area. If we get back above that bear flag, it'll just completely bust up the symmetry of that pattern and obscure the near-term outlook for the chart. So, I wouldn't go long the stock at that point, but I would definitely consider placing a stop not far above that 173 level. But I still think the trade has some promise and potential down to at least this first target here. Okay, last one is SAVE, S-A-V-E, Spirit Airlines. Spirit was mentioned on April 28th at the top of this symmetrical triangle, and from there the stock Spirit went on to give up the ghost and just plunged all the way down. So that's about I have to move out here to mark it. Roughly, if we go down to where it hit on the lows, that's about a 17% drop. in just a few days. So, nice short trade to hit the first target, and then some. And if you look, this is just, TA 101. This is the line I had posted the following day on the chart. And you can see that nice doji. Prices managed to pierce that support level intraday, but closed right back on that line. So we had the, 1, 2, 3 reactions on that 66.50 level. We had one, back here on May 5th, Tuesday, Wednesday, and then Thursday. Low, close with an intraday break, but it closed back on the line, and then another low on Thursday. So prices naturally are having what I refer to as a reaction. That's what each target level is there for. It's where I expect a reaction, which is a pause and or a bounce or consolidation. So ideally to see this one play out and continue lower. Certainly could go up a little bit more here, or it could turn reverse at any time. This would be the next target, and then finally the final target of 53.16. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.